Let's take a look. AUVI. That one's been getting super tight and it's been gearing up for that $3. What you're going to want to see with AUVI, you're going to want to see it claim $3. It's been trying to build up from $2.50 and $2. So in ranges of 50 cents. Building up for that $3. Look up at the daily chart. The only thing that's got me a little worried with it is it's a bit overextended. It's day 3 now of it green up here and hovering just below that 200-day moving average. It's still got hope. I would definitely keep it on watch. 6.3 million float. I'm not sure if they have any offerings or warrants. You know, that's something you should be cautious of with these small caps. But yeah, definitely. This has got opportunity. It's worth keeping it on watch. You can run all the way up here to about $4.50. $4, $4.50. If it gets up over that 200-day moving average. Even here on the weekly chart, we got the 50-day moving average here at $4. And then on the monthly chart, we got the 13 EMA right here at $3.50. Redbox went on an unbelievable run on Friday, huh? If you looked at the big picture on this and zoomed out, this pulled back from its highs right here from 1150s all the way down to 850. Let's get out our pen here. Right here after it topped out, it pulled back here. Right to that $9 level, I'll say. And then Friday just geared up right here at that $11 and blast off. Ran all the way up to $15. Nice pullback. Rest of the day retraced. And now today you're getting that parabolic gap up. This is what happens when short sellers keep trying to top pick on a stock. And remember, when was it? Like 3 weeks ago, we put a video out stating that when the markets are in the toilet, like the SPY and the indexes and the NASDAQ, when the indexes are in the toilet and the markets are gradually trending down lower, you'll notice that volume will return to the same names over and over and over and over again. There goes your AUVI testing 3 again. Even AERC on Friday trended up all day Friday, running from 8 all the way up to 13. And then now today from 1150 all the way up to 1450. Markets are in the toilet, but small caps are on fire right now. Nice job on DAWN, Calvin. Watch for your AUVI now to hold that $3 now that it's pushed up over it. The 200-day moving average is at $3.30. Damn. What the hell did you do on... You trade DAWN pre-market? Day one biopharmaca. DAWN. Looks like on Friday it popped up after hours and then trended up and then it continued. Got that euphoric run up right here after trending up all here after hours to 12. Exploded up here to 1450 and then 16. Now it's getting a nice retracement on it. So a basic 50% retracement on this is down here at 1120s. That's a long ways. The stock is up 108%. %, measured from that low, is at 1250. Right there. You could see one good snap on this. Back up to near its highs, up here at $16. Draw a trend line out on it like so. Patiently wait for the trend to reverse. Play the reversal for the first bounce. Amazon's been getting destroyed too ever since it did that split, that 20-for-1 split. It's at a $25 discount from its split, down at $100. I heard that Tesla was gonna do they're in talks to do another split. What was it, a 1-for-6 split I seen you guys talking about? A 3-for-1. So that would be... See, the last time Tesla did a split was like... When was that? Like 2 years ago? Now they'd be doing another one. What's going on, Rome? Good morning. There goes AERC up to new highs. Now AERC That stock's got a lot of room to run. Even though it has ran a lot, look at the daily chart. We got resistance here at 14 and resistance here at $23.50. So we've got a lot of room. Look at here at the weekly chart. We're up over this major resistance here at $13.50, $14. We got all this room right here, this big void in the chart, all the way up to a high $40. Yep, about right there. That red line. And then right there. Traders are going to pull this chart up, and when they look up at that daily chart and they see they look left, there's no resistance. This was a beautiful one on AERC. So far, it's ran up $4 a share from the open. Redbox is still even in range to continue squeezing up. Most definitely, we could see Redbox hitting $20. You know, everybody's got their eyes on 20. We're also near all-time highs with Redbox. And you're right. I think it was you, Hawk, mention Redbox reminds you or gives you AMC vibes. I believe it was you. No, that was Rome that said that. When AERC No, I don't think no, AERC wasn't one of the first new name IPOs starting to pop off. Because when AERC started to pop up over $2, that was back on June 3rd. That was like last week. And then before that, the last time it really ran was when it IPO'd and opened, and that was way back in November of 2001. We're up here at resistance with Redbox. Got a lot of volume pumping into Redbox. Oh, you're talking in December for AERC? Okay, I got you now, Rome. Looks like COGT. This was a big runner on Friday also. Running from 650 up to a high of $11. You could see it get a nice little pop on it today for a bounce after getting destroyed. Blue. This one's getting destroyed. AUVI, that's battling at 3. So far, it's holding that $3 though. Been in and out of that general area 3, trying to build. I think your target is up there at that 200-day moving average, $3.30. There goes Redbox. That's a big trend up. OXY got beat down. AMC that's down at $11 a share. IMTE, after it topped out 1325, it free fell all the way down to 360s, continued to get drilled to 250 to $2.35, then it bounced there up to 320. This stock is wild. Oil energy stocks, yeah, they're all down a lot today. I mean, even look at the market. The SPY, remember back when we were talking about how we finally got a bounce up right here and it was consolidating and resting and we didn't know which way it wanted to continue? After this downtrend here, and it finally got this bounce up here, and it was pulling back and consolidating in this range, we didn't know which way it wanted to go. It was like a 50-50 in this range. And then it's ironic how the indexes and how the stock market revolves around the world and events around the world. I've always been fascinated with that. And then they put those numbers out last week and they said inflation is still going to continue to rise. Now look at markets are getting destroyed back down. United States oil is still doing good. Yeah, it's a long term for him. It makes you, well, my long-term portfolio on Robinhood, it's down almost 8% with the big drop down. So I'm down, past week, I'm down 800 on the long term. Literally, January 9th, I was just up on it. It was 5,300. Now it's down to 4,300. No, I'm not buying Bitcoin no more. I bailed on Bitcoin. Every week there, I was putting into Bitcoin, and it was just getting drilled and drilled. And as soon as it started to fall through 40,000, Bitcoin was like in a free fall. Look at it, it's down at 23,000 now. I think total I lost like $600 on Bitcoin. I bailed the fuck out on Bitcoin. As soon as it started to crack 40K, I was like, nah, I'm out. Fuck this. Because I was buying Bitcoin up over 50K and accumulating all the way down to 40K. So I knew once it started to crack that 40K, it's going to free fall back down to 20 to 15K. Because those are huge levels from the past. So then what I did was I recalibrated the portfolio and I loaded up on QQQ, VOO, and WEBL. Those are the three holdings that I have. Yeah, crypto, it's super volatile. Super volatile. That's the only thing I didn't care for with it, because I was gradually putting into Bitcoin along with Tesla, the S&P 500, and NASDAQ. And then Bitcoin, with it being so volatile, it would just eat up whatever the SPY did, the NASDAQ, and whatever Tesla did. It would just gobble it up, no problem. Oh, there you go on AUVI. That one had a nice run up there to a high of 343, and then it quickly cracked back down to below $3. So if the smart money was selling when this was surging up here to that high 330, 340s, where that 200-day moving average is, and the dumb money was chasing after it and they got dumped on. Even look at the past here on AUVI. With every run up that it likes to have, it likes to give back a lot of its gains. See, it ran up here 250 up to a high of 330, and then it retraced all the way back down to where it started. So this stock, it's got a big history. So you look at this day right here too. Runs up, gives back everything. Runs up, gives back everything. It's paying attention to the small little details, man. Noticing a stock's personality, as I like to say. It will tell you a lot. in what the stock likes to do. Took my little slice for the day with AUVI. I'm happy. Hey, that's a good start to the week, man. Awesome. With that too, it gives you a cushion to build off of now for the rest of the week. Oh, I got you guys here on YouTube. You guys are over here on the main screen here. Let me put this back on. Redbox. I'm over here in the Discord on a different screen for you guys. You guys are looking at the multiple charts like this. Yeah, if Redbox can now, I think the make it or break it line for Redbox is at $16. If we can hold 16 and build off that 16, Redbox is going to 20. Oh, the SPY it's just made a new low. I'm gonna pretty much say all of 2022, it's gonna be a write-off. 2022, everything's gonna, all the indexes, the SPY, NASDAQ, Dow Jones, they're all gonna trend down lower and lower and lower and lower. We need, in a way, it sucks, yeah, but we need this. We do. We need this. A 13, 14 year bull market run, that's pretty impressive. Now it's time to rest. And then during this recession, bear market, educate yourself, study, prepare for that next bull run. And you guys already know how hot it can be when we're in a bull market. And that's where you're able to make a lot of your money and take advantage of the opportunities. And then you'll see a whole new wave of people come up. And you're going to be like, damn, you have a long way to go in your career. Not sure what this ACLX is. Got super light volume. But yeah, it got a nice little pop on it. Friday, it ran here from 19 all the way up to 27. biotechnology company. Looks like Drip is getting a nice rip. This is an inverse ETF, oil and gas. I think it's Drip and Gush, Gush. Yeah, Drip and Gush. I can't say that on air, but yeah, I agree with you, old army guy. Now with AERC, with it running up now, let me blow it up here for you guys here on. Or actually, I'll just flip my screen over. Hold on. So with AERC, looking at the big picture, we've ran up from about this $9 nonstop to $17 for a day and a half, day and a quarter nonstop. So we need to pull back down. I'm thinking like 13, 1250, this area here. But if we can build up off of 14 here, we definitely still got a shot running up to 20. So 14 is going to be our first level. And if we crack that, our next level is going to be down here at 1250. And it's still technically holding trend. That blue moving average here. We're $2 away from that trend line. So Buying AERC up at these levels is pretty stupid. Wow, DAWN had one quick pop on it. Then it stalled out there. That's a wicked candle. Bitcoin is falling because some of the brokers are not letting people withdraw funds. That's scary. They're not letting them withdraw their funds. It's probably because they took their money. Yeah, you got to be careful with those brokerages out there. A lot of those overseas brokerages, they're not really, you're not protected if you're in the United States and you're using those offshore brokers. They can close up shop, take your money, and there's nothing you can do about it. Nothing. HTCR. Just like AUVI, HTCR. It's been trending up for multiple days straight. Here on the 10-minute, obviously, HTCR, it's trying to build for a potential squeeze. After wedging out here. See, it fell through there, trying to trap shorts and looking to squeeze, but stalled out. Then it fell down to around that $2 level here. Then it's been building back up to the level it fell through from that wedge. Nice rounding bottom here. Building back up, trying to retest again that wedge area. So this wedge, everything's correlating to right here at that, looks like $3. So if this can keep building and holding, you want to see it build in levels. So 250 build up for that $3 break, so it squeezes out shorts. After that, it's got room to run up to almost, looks like $4. Worth watching, see how it plays out. It's still got work to do, but it's the same exact scenario as AUVI. Market's been open now for 1 hour. We still got Redbox trying to build off that $16. AERC building from $14. Indexes are all in the toilet. As you see here, the QQQ, it's down 11 points, almost 4%. And then the SPY, it's down 12.5 points, just over 3%. VIX is up 20%. Bitcoin, crypto coins plummet in intensifying sell-off. Looks like we got a nice little squeeze forming here with the UVXY. We got the 50 and the 200 day about to be coming together here pretty soon. Building off of this 12. Connect the lower highs. We're wedging out. And we got, see how far apart this red moving average is here? And then the blue moving average over time. Now, if this blue moving average here starts to come up and it busts up through that red moving average, we could squeeze up higher. But then the indexes will crumble and fall apart. You look at that weekly chart. We can actually go all the way back here. About right here is when the index is topped out. All from December 2014 all the way up until August of 2015. So for 8 to 9 months, we were just hovering at the high here. And then from August 2015, we didn't come back to that high till right here, July of 2016. So 1 year, this market fell down. And it didn't start to make a new high till a year later. And then we ran up. AERC and Redbox are obviously the top stocks of the day. Milk Cash asks, do squeezes really happen in stocks under $2.50? Well, of course they do. Most definitely. The thing though with stocks that are near $1, like stocks under $3, I typically stay away from, because the only time you really want to be trading those stocks under $3 is when they're obviously hot and you're noticing every day you got multiple stocks, penny stocks under $3 running every day. You only play them when they're hot. But to briefly just answer your question, oh yeah, squeezes happen everywhere, especially in small penny stocks. So far, we're 6 months into 2022. Half of the year is over with. We've made it this far. right? Indexes in the SPY have been gradually ticking lower and lower. This is good opportunity to set yourself up for long term. There's a couple ways you can go about it. You can either sit on cash and just stack cash, or you could just gradually be building a little portfolio, contributing to it every week. And in your portfolio, you don't need to have 10 to 20 different stocks in your portfolio. All you need is just a little handful of stocks that you truly see value in for the next 10 to 15 years. So like, for example, Amazon, for example, Amazon's a juggernaut. We all know that. And with it having the recent split here, people could be looking at that as opportunity. And with the getting drilled down like that, $25, people are looking at it like, I'm getting it at a $25 discount. So they'll add this to their portfolio. The S&P 500. You can't go wrong with the indexes and ETFs. VOO. Don't forget the big picture. Gradually over time, the stock market is designed to go up. So gradually over time, we go up, and it's to help balance out, what is it, inflation, and what's the other word I'm looking here for? And you get more on your money too by having it sitting in a brokerage than in your bank account. I think that you collect the banks pay out like 0.1% interest for having your money just sitting there, versus a brokerage account. I think they pay upwards of like 6% just to have your money sitting in a broker. In order to have a bull market, you got to go through a bear market. I mean, you got to think, man. We've talked about this many times in the past. The last time we really had a bear market was back in 2009, 2008, when the financial market collapsed right here. And this is looking at a monthly chart. Right here is when we had that collapse. And then since then, when we started to lift up here mid 2009, it's been non-stop trending up. Non-stop. That's a hell of a bull run right there. That's a 13-year bull run, man. That's phenomenal. Most bull markets last, on average, maybe 4 or 5 years. But this creates opportunity. That's what a lot of people can easily overlook. This creates opportunity. Markets are approaching being open for an hour and a half. It's about to be 11 a.m. Eastern time here in 15 minutes. Indexes chose their direction for the day. Well, dang, Calvin. That's a good start to the week, man. Indexes in the market's red and you're pulling green. You look at here on HIBS, this is an S&P. Directs are on. You got a squeeze going on here with the moving averages. See the 50 and the 200 day. But at the end of the day, Calvin, you put in all that work, man. I just helped guide you. It truly shows too, man. As we talked about many times before, see a lot of people come and go in this game. You just gotta stick through it and you gotta get a lot of those first time experiences under your belt. And then once you start coming in here every day, you truly do start to see things happen over and over and over again. And all that's playing out is just human behavior. That's it. I mean, this isn't our first rodeo watching stocks like AERC run up like this. Stocks like Redbox run up like this. And you put that work in by studying these charts, breaking them down. Don't underestimate this red box. This thing could easily turn around. Think of all the short sellers that underestimated this. I'm going to hit record here and I'm going to record something real quick. I think a big thing that newer people easily overlook when it comes to day trading is how short sellers think, and that short sellers make money when stocks go down lower. Knowing how a long thinks and how a short seller thinks helps with your technical analysis skills. When it comes to these penny stocks, it's a very, very, very competitive field when it comes to short selling. Everybody out there getting into day trading, they see traders out there like Steven Ducks, Tim Gertani. They're one of the top short sellers in the penny stock land, and they see these guys pulling in hundreds of thousands, millions of dollars just simply shorting these garbage penny stocks. And they make a lot of money, and people instantly say, I want to get in on that and do that too. Because we all know these penny stocks, they're garbage companies, and a lot of times they pop up and then they fall down. I've never been much of a fan of shorting. My whole career, I've made most of my money going long on stocks, and I see a lot of really good opportunities in short squeezes. We've recently had some epic short squeezes that the whole world pretty much was a part of, when GameStop and AMC had amazing squeezes to the upside, and a lot of people didn't even know that they were squeezing up, and they joined in on it. Knowing how a short seller thinks goes a long way with breaking down charts and understanding how these stocks like to move up and down. We know that shorting stocks, it's very competitive, especially when it comes to small cap stocks. You're limited on the number of shares that are available to short the stock. We know that it's very competitive. Everybody wants to get in on short selling these penny stocks because we know most of them fail. They look up and they admire their guru. They want to imitate their guru. So these short sellers, especially when it comes to small cap stocks, you'll notice that the popularity for a broker to have shares available to short the stock, it changes from year to year. 1 year, TD Ameritrade could be the broker to go to for borrows for shorting small cap penny stocks. Next year, TD Ameritrade doesn't have any shares at all, and you'll notice E-Trade always has easy borrows. Then next year, Centerpoint Securities has easy borrows. So every year, the popularity in brokerages having shares to borrow jumps. It's always been like that throughout my career. I mean, my career, what was it? 4 years ago, what was it? I think it was TD Ameritrade had easy to borrow, and then it flipped over to E-Trade, and then it flipped over to Cobra, had easy borrows, and then now this year I forget what it is. I want to say light speed maybe, but I may be wrong. So being a short seller, you have to have multiple brokerages open. And with it being so competitive, you have to wake up super, super early to reserve and locate those shares to short the stock. Now, with it being so competitive and you're locating these shorts, you have to pay a fee. It's called a locate fee. And then on top of that, you got to pay another fee to hold those shares. So even if you don't use those shares to short the stock, you still have to pay a fee for holding them. And now this is where the mind games start to come in. Now that you have the shares, you've located them, they're on hand. Now you have them. Now you kind of feel obligated that you have to use them because you're paying all of these fees to short the stock. So this is when short sellers, they start top picking on these small cap stocks. Or once a stock tops out, all the short sellers pile in on the penny stock. They overwhelm it. And then once the penny stock bottoms out, like it does right here, for example, once a penny stock stops going down lower and it starts trending up higher, all those short sellers then have to buy, cover their position, and then you have retail investors coming in. They're buying as well. I call it a double whammy. That's when you start to see prices skip to the upside real violently and quickly. And it's from short sellers covering their positions all at once. Once one short seller starts to cover, it's like a domino effect, and other short sellers start covering. So it can be a bit complex too, in understanding and knowing all of this going on by simply just looking at a chart. But as I've said to you guys, and as I say at the end of all of my videos, have that patience, have that discipline, study, study, study. As traders, we're studying these charts. We're breaking them down. We're getting better. Figuring out, why did this stock move from here up to here, pulled back down to here, and then ran all the way up here and just kept running all up like this. By doing this, you're seeing human behavior patterns play out over and over and over again. And look what happened. This stock came all the way back up to $10 right there, pulled back down, and then squeezes up here to a high of $17.75. It's up to you to tell the stock's story. Every stock is going to have a story to be told, and it's up to you to put the pieces together to tell that story. So knowing how a short seller is thinking and how a long is thinking and putting it all together to make sense of what's going on. When these short sellers, they start top picking the stock, you'll just see it squeeze up higher and higher and higher and higher. And this is where I'm going back to saying, when they reserve those shares and they're on hand, they feel obligated that they have to use those shares because they've already invested in the fees. And then they know how competitive it is. They could have the shares today, not use them, but then they can't get them tomorrow because somebody beat them to the punch. So when it starts squeezing up like this, short sellers automatically start to think and assume this is a garbage penny stock. It's got no business being up this high. So they start shorting it. And once it starts failing at the high of day and starting to pull back down, that's when all the short sellers say, all right, it's time. It's topped out. They start averaging into it. And then all these short sellers start to overwhelm it. And then this is Friday right here, what I'm drawing out. Then we close after hours. Monday morning, all those short sellers wake up. The stock's gapping up $5 a share, up here to $18. All those short sellers start to panic and they have to then buy and cover their position. And then you have retail traders that like to trade and go long. You have those people coming in. It's the double whammy effect, squeezing the stock up even higher. So that's when you can really start to see some really crazy, violent short squeezes to the upside. And by knowing all of this and putting it together in your head, and you know what's playing out because you've seen it time and time and time again, it does help with the psychology part in holding on to your trade and letting it work out. And it all comes with time, by seeing this play out over and over and over and over again. Now, everything that I've just explained in this, some people, you may not comprehend or understand everything that I just broke down and understand. It takes time to fully understand this. Look at AERC here. This stock recently ran up and it's still continuing to squeeze up to the upside. This was the number one stock last week, running up here from $2.50 all the way up to a high of $6. See how it tops out there after hours, and then the next day it's gapping down right here, starts to trend down lower. Short sellers think it's over because they're saying this is a garbage penny stock. It was just at $2.50. It's all the way up here to $6. It's got no business being up this high. It just tripled in value. So all these short sellers start piling in, overwhelming it. And look at how crazy this stock squeezed up. It squeezed up from $4 all the way up there to a high of $14. It ran up another $10 per share right here. That's insane, and that's good opportunity. And we see moves like this happen all the time in small cap land, all the time, simply because, like what I like to say, it's very competitive for short sellers. They all want to make money from their gurus they look up to, Stephen Ducks, Tim Gertani. I mean, they see Stephen Ducks pulling in millions of dollars, shorting these garbage penny stocks. They all say, man, I want to be like him. So they start obsessing over him and trying to imitate him. And it's one of the oldest tricks in the book. We see so many people try it, then they fail. They get a bad first time experience, and then they say the stock market's rigged. They give up and then they quit. We see a lot of people come and go in this game, and everything that I've broke down and explained to you guys in this video here, it's a lot to take in and comprehend. And this is the way you have to try to think, and you want to try to stay one step ahead of your competitors. Who remembers back when GameStop and AMC had those wicked run-ups? All that was a giant short squeeze. Some institution out there got stubborn, didn't cover their position, and the stock kept squeezing up higher and higher and higher. And a lot of people failed to really understand that all that it was a short squeeze. And for traders out here, we're out here every single day seeing this happen over and over again in small cap land. Most of us know after a stock squeezes up higher, it's got no business being up that high. So the prices are going to gradually decay all the way back down to where it came from after the squeeze. Once all the short sellers get squeezed out, the stock's got no business being up that high. It'll just gradually decay all the way back down. And the gradual decay back down, it could take days, it could take weeks, it could take months. And there's still some good opportunities for bounce opportunities, reversals, and so on. But the main thing I really want to get across in this long video here is how you really truly got to understand the aspect of how these short sellers are thinking out here and how these longs are thinking out here. It's a battle between the bears and the bulls, and you need to know how these bulls and bears are thinking and who has control and how has it played out over time. It's just like being a history buff and you're going back in time and you're learning about all of the history from all of the wars. If that makes any sense. It's a lot of work that goes into wanting to be a trader. And that's not even counting how you have to emotionally condition yourself. You have to learn from a lot of your beliefs that you've stemmed from your childhood, develop and grow from your past experiences and your beliefs. It's a lot. It truly is. Checking back here on Redbox, we've been consistently pulling back to that $16 in this green line. We're puttering out like a basketball. You can easily draw out a wedge on this right at 16, and just like a basketball, that first bounce is always going to be the biggest, and it's from then it's just gradually puttering out like so. Look at it like a basketball, but it's still a 50-50. We don't know which way this wants to go. And this is where a lot of people really screw up with pattern trading. I look at all patterns, they're a 50-50. We don't know truly if this is going to continue to go or if it's going to fall and crumble and fall apart. That's why it's best to wait for these patterns to break out and then confirm. Or you can just play the range of the pattern. But you got to quickly identify the pattern before it plays out. I don't know if AERC continues to run up here. I really don't. I'd be careful. Yeah, EKSO. This is a familiar name. This EKSO, it's been around forever. I remember back in the day, EKSO, they were experimenting with like eco bodysuits. Like, it was weird. Like, they were building these like hollow bodysuits for the military or something. It's this happened like 5-6 years ago. Your AUVI has been hovering at that $3 level too. The only thing that concerns me though with AUVI, it got denied hard over that $3, and it already went up and it kissed that 200-day moving average. Looking at the daily chart, what is it on, like day 4 being green? Looks like the Qs are trying to gear up and the SPY's trying to gear up for a potential bounce. Let's take a look real quick. So with the SPY here, and this is just a basic, this morning with the QQQ, we wedged out here and we started to free fall from that 279. We fell down here. You can easily plot on a trend line, so you can measure from there down to the low. We'll bounce back up, probably back up to this level here. Now that it's established that low, And if it breaks over that trend line, watch for it to build off that trend line. Indexes are tricky though. They're super hard to trade. I'm not good at trading indexes. I suck at trading indexes. I just stick to my small cap stocks. So AERC's running up, and then also Redbox is starting to break up. See that our make it or break it line at 16 held. So now that we've broke out from this wedge here with Redbox, 1650, watch for it to pull back to around this area and hold, and we'll push back up to highs, retest highs. We'll play around here for a second, and then this is where you can get that epic squeeze up to 20. That's going to be the idea. So 1650, that's going to be the level. That's where you're putting your risk, below 1650. Do you have videos of live streaming when the whole market halted down in 2020? Yeah, I do. I'd have to go find it though. Or actually, you know what, Rome? Hold on. Even better. Watch out for Redbox. So go to my channel, go to the playlist section, and then you're gonna want to go into the playlist. I should have a playlist titled Stock Market Halt History right there. Right there. Market-wide stock trading halt. Circuit breaker halts at open. And this is when the whole stock market was crumbling and falling apart. I'll share that in the Discord, the link to that video. And then I also have the flash crash that happened in 2010. I went on Thinkorswim. These videos are old, man. I made this back in 2019. I went on the on-demand with Thinkorswim and went back in time to the flash crash to watch it play out. There we go with the QQQ and SPY. We're getting those bounces. And then Redbox is now pushing up. Back up to high of day. See here, look at the 3-minute on Redbox. The 3-minute. Notice how we trended down here and wedged out. And during this pattern setup, notice how volume stepped down. And then it got real small. And then now we're starting to break up from the volume pattern and this pattern. And from 16 now, we've pushed up to 1620s or 1720s. Then you'd pull back, and that's that 1650 area I was talking about. And now we're building up and pushing up again, and volume is confirming with each step. Go back in two and look at this one. Trending down all right here. Start to break up there. There's your step up in volume. Volume starts to max out right here. And then we go back into another volume downtrend. See the QQQ. We were just looking at it, putting this all together as it started to crack down here. You could have easily plotted on a trend line on this, and it started to push up and break from that trend line. And we said you could probably see a good bounce on it up to this level right here, up to where the VWAP is. So far, we're almost there. And by watching these indexes, you can correlate it with your stocks. If you notice your stock is correlated with the indexes, patiently wait for when that momentum like this kicks in. And look at how it follows through with Redbox and AERC. Right when these indexes start to break trend and push up, look at AERC. Look at Redbox. They've all got momentum and pushed up. Remember, as I've mentioned in the past multiple times, 3 out of 4 stocks are correlated with the market. So it's important to identify every day if your stock is correlated or not to the overall market. See, there we go with the Qs. We've ran right up to our level. Same thing with the SPY. We ran right up to our level where we fell through from the wedges that were built from this morning. The SPY right here started to fall down through. Draw your line out. The trending a little bit up. But after we break just a basic trend line here, got a nice push almost all the way back up to where we fell through from. HTCR up over $3 is what you'd be looking out for. There you go. Look at DAWN. This one from 13 just had a run up to 16. That's a nice $3 run up. I think that was a big realization for me as a trader as well. When I was first starting out, I would focus on these small penny stocks. Let me see if I can find one real quick. Like CEI, for example, Chamber Energy. I've been trading for 7 years. And for as long as I've been around, CEI has always been around, always. This is at 50 cents, 50 pennies. And when I was first starting out, I was interested in penny stocks like this, as I'm sure a lot of people out there were at first interested in penny stocks. You just get hooked on the idea that you can buy so many shares with little money, and then you get unrealistic expectations. But at the time, you don't realize the unrealistic expectations. And you think to yourself, man, I can buy 10,000 shares of this stock here at 50 cents or 1 penny. And if it runs up $1, that's a good return. I'm rich. That's a good amount of money. It's unrealistic expectations. And in a lot of times, you'll see with these penny stocks, nothing really ever happens with them. They get hot maybe a couple times throughout the year, There's a lot of bag holders. You see them crumble and fall apart super fast. And the moves on them are just not great. I mean, look at this move here. It ran from 60 pennies. This run up here, it ran up to 66 cents. So in total, this stock ran up 6 pennies. It looks like a good move, but that's not a good return, really. That's 6 pennies. Now, if you had 100,000 shares running up 6 cents like that, yeah, that's a good return. But keep in mind, anytime you have to buy more of something, you're only increasing your risk. So this had a 6 penny run up and you have 100,000 shares. That's a good return, but this could have went the other way as well, and that could have been a bad loss. That's when I started to see and branch out. Look at the stock like DAWN here. Yeah, it's a bit more expensive, but at $13, this stock ran up to $16. That's a $3 per share run up. So I would be saying to myself, well, all I would really need is maybe 500 shares, maybe 300 shares. And if I can just get a slice of that, maybe $1 out of that $3 run up, that's still a good little return for the day. And then I started to gradually see too stocks like Redbox. Look at this bad boy. All week, or the past few weeks, Redbox has been squeezing up. This stock ran from $6. Now it's hitting $18. That's a huge run up and a lot of amazing opportunity. And even in this day here, it's got a nice range from $14.75 up to a high here of $18. That's a $3 range on a stock like this. Look at AERC, another example. This stock, the last few weeks, again, it's been up and in play. This one ran from $2.50. In one day, it ran up to $6. And then the next day here from $4, it squeezed all the way up to $14. This one day right here ran up from $4 to $14. That's a $10 per share run up. Now even with this at $4, you could still buy 1,000 shares. And total at $4 buying 1,000 shares, that's a $4,000 investment. And even if you were to say from the bottom all the way to the top there, and it's still unrealistic expectations, but a $10 move like that from 10:30 up until 2:30. So in 4 hours, this stock ran up $10 a share. That's potential of $10,000 in just 4 hours. And all I'm looking for is just a slice of this entire move here. Even if it's only $1 or $2. And then you have to counter in too. Every person out here, we are all in our own unique situation and in life, and we all have our different beliefs. I've seen people get discouraged and beat themselves up because they've sold too soon and the stock would continue to run up like this, and they would trigger revenge trading and chase after the stock and ultimately take a loss on it. But what I'm trying to get across here with you guys, there's a lot more opportunity out here, and you're going to see a lot more opportunity and greater opportunity in these stocks that are above $5 a share. Stay away from those penny stocks, because all that's in those penny stocks, like CEI, for example, this is the only penny stock I can think of at the moment. That's why I keep bringing it up. All that's in on these penny stocks are bag holders. You got long-term investors. And then you go off on social media, see what other people are saying about these stocks. And people are just bitter because they've been holding on to something like this, tying up their money for years or months, and it just keeps trickling down lower, and they don't want to admit defeat. So any criticism, they're bashing or trolling just simply because they're pissed off because they got screwed over and they fell victim to another penny stock. It happens all the time, and we all get sucked into these penny stocks immediately when we're new. I would avoid these at all costs because we all get hooked on the idea that, hey, at 50 cents, I only have $2,000 to trade with. You start thinking to yourself, okay, now I can buy 1,000 shares. But then you start getting unrealistic expectations of it moving up 50 cents, $1. When a stock down here at 50 pennies, a 50-cent move on this in the financial world, that's a big, big move for a stock like this. It just doubled in value if it moves up 50 cents from 50 cents here. It just doubled in value, and that's a 50% run up. Even with it being in the tight little range that it is today, from 47 pennies up here to 50 pennies, it's down almost 9% on the day, and it's only down, what is that, 4 pennies, tenths of a penny. That's percentage wise, that's a big move. And don't get discouraged because these stocks like AERC here is up at $13. Don't say to yourself, I can't afford something like this because I only have $2,000 and I can only buy 150 shares of a stock like this. Well, look at it, how much it moved, man. It moved from $8.50. It ran up to $18. That's a $10 run up. So your lousy 125 shares, if you would have played it from $8.50 to $18, and nobody is ever gonna perfectly ride out or nail a trade perfectly at the bottom and hold it all the way to the top. Nobody's ever going to be able to do that. But from a move like that with 125 shares, that's like well over $1,000. That's a huge return. That's a 50% return on your little $2,000 account or so, you know? Always pay attention to stocks above $5 a share, and don't get scared away by the cost. Focus on how volatile they are. You can easily manage your risk versus reward, and you don't have to buy as much as you do with those penny stocks. Yeah, 3 hot runners today that I can see so far. The SPY getting a very nice rebound. Same thing with the Qs. I have a lot of lessons here. I gotta go through and render and upload still. It's about to be approaching noon here in about 20 minutes. Market's been open for just over 2 hours. So this morning with the indexes, we were getting a gap down. Then we wedged out here. In the first half hour of the day from that open, the Qs wedged out here and we chose our direction for the day. And at just a little after 10, we started to trend down here. Nice trend down here all the way down to 275 just about. And then now we're getting a nice rebound and a bounce back up to the level we fell from this morning. So you're going to want to be watching this 279.50, 280 level for the Qs to come back up. If for any bulls to have any positive potential, I would say you're going to want to see it come back up and reclaim that area. But it's looking like the Qs, it's just going to bounce up, touch and kiss this, and then trend back down for the day. Because we've established our trend. Until the chart proves otherwise, we're in a steep downtrend currently. And we have been the last few days here. One, 2, 3 days, 4 days, we've been trending down. Yeah, AERC. The only thing that scares me though with AERC when you scroll out on this, it's just been non-stop, just trending. That's the only thing that scares me because it's been going non-stop from $8.50. That's a huge run up non-stop. The longer this trend holds, People just keep jumping in and joining the party. See, we drew out the trend here on the 3-minute. That trend now, it's starting to get pretty steep. Now, once this trend starts to crack, this stock's going to crack hard. So just be aware of where the stock's at in that trend line. As long as we hold over the trend lines, we're bullish. And then Redbox. It's been consolidating. We've had a nice run up there on Friday. We pulled back. Nice healthy pullback Friday. And then this morning we got a parabolic gap up. And we've just been pretty much consolidating and resting. This one's even got a trend on it. Right there. Our make it or break it line this morning was at 16. We held that 16 and now it's building up off of 1650. So one level at a time, this stock has been slowly building. Now it's building up off 1650 and 17 for that $20 grand finale. I think Redbox is your best bet. Man, coin and Coinbase. When you look at it too, and this is just the way I look at things there, Rome. You notice that coin here, way back on this day right here, it started to really trend down from $72 there. And as it trends down here, you could just see with me plotting out these lines how it's just getting driven down, just driven. And we start to level out here and it's taking just a pause and it's starting to look like it's trying to rebound and bounce back up after trending down here recently. And then you're just getting this bloodbath of a gap down. This is like your grand finale to the downside right there. That's one way to look at it. From $60, making a low down here at 45. Zoom in on this too. Also the sharp V right there. And then it reclaimed $50. That's a nice psychological price level. So from 50, it confirmed 50 support, and off of 50, it's moved up to $54 now. This one was another good one. I say it to you all the time, Rome. It's all in the way you look at these charts and the simplicity of it, my man. A lot of people, they overlook the simplest things, man. The simplest things, because they clutter their charts with all those unnecessary indicators, or they just don't know what they're looking at. And when I look at these charts, by putting in all of this experience and screen time, man, your eyes just naturally start to pick up on things. And this is why I always try to keep my charts clean. I want to naturally just look at it and pick up on patterns that I've seen, or just pick up on what makes sense. And for me, I can easily start to see when stocks start to trend down like this, and then how they just like, for me, man, like looking at this just like nonstop, it's like I'm telling myself, like, man, look at it, how tightly they're pulling it back right here. Like, there is no upward momentum at all on this, and they're just drilling it. Going into day 3 here, same thing. They're drilling it. And then it finally starts to break up right here. And it does look good. It does. Starts to pull back. And it's holding up quite well there. But that's just unfortunate over the weekend. And then it gapping down like that. That's why it's not ever a good idea to hold on to a position over the weekend. And I'm not a fan of really holding anything overnight, because you just don't know what to expect the next day. Anything could happen. It's just too much risk. But by patiently waiting and you telling yourself, like, man, they really drilled this stock down. It was at $72 4 days ago, and nonstop they drilled it down to $46. That's a huge downfall. Yeah, look at HUSA. This one's starting to get a perk in it. But you're going to have a lot of resistance here at $7. You can easily draw out a line like so here, connecting the last 4 days. It's going to pop up to this line. And then what I would probably want to see for it to run up to this line just below 7, pull back, you're going to probably want to see this level here hold up as support, let it play around in here and build up for that squeeze. And that's when you could see this run up $7.50, maybe $8 it can run up to. Yeah, that momentum's carrying over. I can't tell you how many times I heard people mention CPI just over ever since Friday till now. Everywhere I've went, I've seen somebody mention or talk CPI. I think too, the CPI number wasn't this high since the 80s. Is that correct? Or was that a different number? Yeah. Yeah, I knew that. I had a feeling that's what it was. Damn, I got a good memory. I think that was Friday when they said that. The last time that number wasn't that high was like 80, 82 or something. You can learn actually a lot of good lessons. This is a tip. You can learn a lot of good lessons and patterns from the indexes. It's crazy how technical the indexes can be. Like, look at here, for example, with the QQQ, as we were breaking it down earlier. Notice how it set up a morning wedge here this morning, and then it started to fall down through that. And by just putting on a trend line on it, and when it starts to push up, chances are it's going to bounce back up to where it fell through from. And that area was through that morning wedge here. See if I can find another example. I think Redbox has one. Yeah, we got one right here. Notice how Redbox here on Friday, dang it, it went away. To try to catch the bigger moves, I like looking at the indexes in 1 hour and 4 hour time frames. 4 hour, 4 hour. I'm trying to think real quickly. Does 4 hours accumulate for the whole week? Because there's 6.5 trading day, 6.5 hours in a trading day. Total for the week, so 6.5 times 5. Oops, I hit the plus sign. I'm horrible at math. That's 32.5. So you're actually missing data. Well, hold on. Let me divide that by 4. Yeah, you're missing data on that, dude. Maybe man, that's a hard one. A 4 hour. You get what I'm trying to do there, Rome? There's 6.5 hours in a trading week. You times that by 5 days in a week, you're getting 32.5 hours of trading per week. The stock market's open. So 32.5 hours per week. You divide that by 4. you're only getting 8.1 candles. So you're missing 12 and a half minutes of data. Okay, so let's factor that into the equation. Pre-market. When does pre-market trading and start? I think, see, it varies, because with TD Ameritrade, they open pre-market at 4:30, but you're not allowed to place a trade till 6 a.m. And from broker to broker, it's different. So it's kind of hard to say where you would maybe start from where it starts. So when they open it up at 4:30, right? And then after hours runs up until, I think it's 8 p.m. So what is that? 4:30 to 8. That's 16 and a half hours. So 16 and a half times 5. That's 82 and a half hours. Divide that by 4. You're still missing data. That's 20.62. You're missing 62 minutes worth, or an hour of data. See, that's where it gets me thinking when using different time frames, and that really opened my eyes to the different time frames and how it correlates with the thinking of it. So I have extended hours on. Actually, with the indexes, it gives all 24 hours Monday through Friday. It's a 24/5 chart. All right, there you go then. I don't think I've ever went to a 4-hour chart. The highest I ever went was a 65-minute chart. And it's all just preference. I mean, you could do what you want. Most people are looking at just a 60-minute, 1-hour chart. But it's just, for me, ever since I read Brian Shannon's book and he mentioned that topic, it was like an eye-opener for me and a no-brainer. Like, dude, yeah, that makes total sense. I'm gonna do that. He also talks about moving averages too, I think, in that book. Did you read it? Did you read that book? How to read the markets using multiple time frames? You haven't read that book, dude? Oh my goodness, man. Dude, that book is a must read. You won't be able to put that book down once you start it, I promise. It's definitely an amazing, great book. I think I have it for free in here, dude. Let me look. Right here, technical analysis using multiple time frames. Oh no, it's an Amazon link. I have the PDF. I know I do. It's going to be in here in the mega. You're on. All right, when you get home Roam, I've said this before, go to your desktop or your laptop, go into the education and the book recommendations, click on that link, and you're going to want to download that file to your desktop. All right. Once you do that, you're going to have all of these different books here. Yeah, it's a crazy amount of books. I had somebody on YouTube actually send that over to me as a thank you for all the education I provided him with from the videos. I know that that book is in there. I know it is. But I bought that book. I think I bought it for like $50, brand new. It's an amazing book, man. Every trader has to read that book. CYRN. I'll look at it here in a second. Techniques of tape reading. Man, I know that book's in here though. I know it is. All right, CYRN. First place I always start, man. Daily chart. All right, so first things first. The float is 3.5 million. It's a low float stock. Then the business summary, just to get an idea of what they're about. They're engaged in developing and marketing information security solutions for preventing web, email, and mobile transactions. So it's not like a biopharmaceutical type of stock. Daily chart. It's been getting drilled down. It's got a history of running. That's what's up. That's what we want to see. It just recently crossed over that 50-day moving average. The last time it crossed over that 50-day moving average, look what it did here. It ran from, what is that, $5 up to $14. But then it fell down. We got all this room right here to run up to, which is right at $5. We got resistance here, about 325. So I think with CYRN, now that we're above that 50-day moving average, let this pull back. Let's hold above that 50-day. I think $2.50 is a good area to build up off of. If we can build up off of 250, we'll push back up to 325, and then we'll play around from that 325, then potentially push up through that, and then we got all this room right here to run to $5. Weekly chart. Right now, it's currently got the 13 EMA as resistance. Monthly chart, I don't see anything. Now looking at the smaller time frames. I personally love the 10-minute chart. That's the biggest I'll go when it comes to my intraday charts. So far we got a nice rounding out here from 250, and going back to when I was looking at the daily chart, what level did I say we wanted to build up off of? 250 right there. It's even correlating over here to the 10-minute. We lifted up here from 250. We ran to 350. We trended back down to 250. We fell through. It came back. And then here's another example, too, of what we were just talking about. Anytime a stock sets up a pattern or something like this, you can easily identify that's a wedge, right? It fell through that 250 level. Always watch for stocks to come back up and retest the level it fell through. So 250 is a very big, significant level for this stock in the past. $250. See, even here in the near future, it came back up to that 250 and got denied. Came back down to $2. right here at 2. And from 2, it built up all the way back up to 250. Just gradually built up, and now it broke up over 250, ran to 320. So now I think you already know 250, man. That's the level. 250. It's got good potential. As I say to you guys all the time, man, don't overcomplicate it. All the answers are right in, and everything that I just broke down, it's easy ass stuff that people just easily overlook. Easy. And all I'm paying attention to is just basic levels. 250's everything for this. CYRN puts out a good press release. It's game on, as Wayne and Garth would say. That's when the stock could really start to run. COGT. Almost looks similar to that last one too. CYRN. The float is a medium float at 45 million. It's a bioscience company. Right here, look at the news. Buzz Cogen Bioscience drops on planned 125 million stock offering. Cogen Bioscience launches 125 million common stock offering. But breaking it down from a technical standpoint, there's a few things going on with this. You could draw out a huge wedge right there that's correlating to $10. I gotta look at a bigger time frame. Weekly chart looks better. See how, and this is a good example, you see how long and drawn out this chart is? How long and drawn out this is? So what I want to do, see, because I said there's a few things going on with this. Like, I'm trying to identify a level, but I can't. It's too drawn out. So I want to condense it. Look at the weekly. Doesn't that look better? Now I can easily see $10. That's a level of interest, because it started to crack and fall through from that 10 right there. Came back up and it retested that 10 there and there. We also have the 200-day moving average right there. It's got about $1.50 it can run up when we look at the daily chart. I don't see it really going any higher than 10. but it could start to build. See, if it starts to pull back down, I'm going to say 7. And it's 7 holds and it builds up off of that, runs back up, and eventually in the future, who knows how far along down the road. But if we break up over 10, that's when we could run up here to, this thing could really run. It could. But it's got some work to do. Now you said this is what you saw. All right, you're measuring there from the high down to the low for the bounce. And what did it bounce up to? What percentage level did it bounce up to? Yeah, buddy. I love those types of plays, man. Love those plays. Just like what you did here. So when I look at this, see, we can condense it here. And that's really what I really like. Like, remember how back on that daily chart, it was too drawn out? And I said I need to condense it. So I looked at a weekly chart. I love breaking down and giving examples on a 1-minute chart. And this is why I have a 3-minute up, to try to kind of condense it a little bit. 5 minutes, it's a little bit too big. 3 minutes for me, I've just found perfect for me to quickly identify the short-term trend when breaking down on a 1-minute chart. So we had a good run up here on COGT yesterday, Friday. Topped out 1075. Then got drilled. And it's almost like, in a way, you want to look at it with your eyes. How, like, it's a wall that they have up when drilling it down like this. See how it got denied all here after hours? There's no positive momentum in on this stock. Getting drilled down like this and going sideways like that. So then going into today, when it's ripping up to this level right here, you already know that previous day's close is looking like a factor, because that's red to green move from the previous day's close. That's a big thing people like to look out for. And we're breaking up over that trend as well at $8. So we run up here, get denied, we pull back 750 right here. And then this is where you could start to put together a plan. And that's when you draw out your Fibonacci from the high down to the low. And you start projecting up a target. So 50%. As we've seen many times before. We'll put that as our target up there at 875. stocks down there at $7.25, $7, I'd be like, hell yeah, this is most definitely worth something to pay attention to. It's got a $1.75 to the upside. And then we have our low established here at $6.75. So I would tell myself, after it pushed up here in the morning to almost 8, let it pull back. Maybe $7.25, $7. I would want to see it start to build up off of, and then putting your risk down below where the low of day is, or where the level $7.25, $7, where you want to see it build up off from. But gradually, as you see, the stock pushed up, gradually pulled back, got up and broke that downtrend that it was in. Then it pulled back down again to 750. And from 750 built up to almost $9. Really had to have had patience with this one, though. Really had to have had patience. Still a good looking chart, though. See, I've always, and you guys already know, I've always been a fan of just going back and looking at how a stock has moved up and how it's moved down and how it's setting up to break up through levels and build up off of levels. It really is something you have to just stick with and train your eyes to look out for. I mean, you can't really just, there's not a magic word I can say and you'll learn it. It's just, you have to apply yourself and break this stuff down and look out for this type of stuff to fully understand it, I would say. It's already going on 12:30. We still got Redbox. Definitely. Redbox is looking really good for that $20 run up. It really is. It's been pulling back and gearing up, building all day. You already know everybody's eyeing that $20, and it's like what Rome said, it's a race right now. Which one's gonna do it? Redbox or AERC? Which one is gonna get that run up to 20? Because AERC is in the same scenario. It's been trending up for days, squeezing up, and it's up near 20. And it's been pulling back. But I personally like Redbox if I was to choose between the two. We're just going to want to see Redbox hold $16.50. That's going to be the level it's going to need to hold. $16.50, maybe 16. That's the make it or break it lines for this. A bit of a range with it being up here at 17.25. I mean, that's a what? 75-cent, $1.25 range on this to the downside. But the upside on it is $3 a share or more. Also, real quickly, BLUE. This was the stock that ran on after hours Friday. Looks like it's setting up for a bounce. You could see this one bounce up to 550, maybe 575, maybe. HUSA had a good move. 6 running up to 725. Yeah, I'm about to jump off here myself. I got a nice rebound. So did the QQQ. I'd say it was a good start to the week. Most definitely. Even though it was a scary gap down this morning with a lot of names and indexes. A lot of stuff really had good pushes today for opportunity. Thanks for tuning in as always, you guys. If you're new here to the channel, hit that subscribe button. Join the Trading Learning 101 community where we all grow as traders and investors.